Hey guys, Joel Frank here, market analyst for YouTrading, and today we're taking a quick look at dollar CAD. Dollar CAD I think is a very interesting currency pair to be looking at this week, not least because we've got the Bank of Canada rate decision coming up tomorrow on Wednesday, and then we've got a monthly GDP update on Friday. So let's jump into the chart, take a look here. I've got dollar CAD here on one-day candlesticks, and we'll just kind of recap what's been going on over the last couple of months. We had this slow, steady rally between about June, and it lasted pretty much until the end of September. Dollar CAD just gradually moving higher. That was kind of in tandem with the dollar picking up some strength, and then more specifically in September, this sort of most recent spike higher before it then corrected lower, that was more to do with risk appetite. Remember, stocks were selling off at the time. But you can see there's this upwards trend line, which had 1, 2, 3, 4 touches, and we've actually broken below that now. We broke below it right at the start of October, and generally speaking, the trend this month, as you can see, has been to the downside. We've been breaking these key levels of support. We broke through the 5th of September low. We then broke through the double bottom, which was July, basically mid to the end of July. That was a double bottom. But we do seem to have bounced here around these lows. This is around 123. These are the lows from the 6th of July and the end of June. That area of support, as I've got marked up here, that's been a pretty decent area of support. And it seems like from a sort of a technical standpoint, from a positioning standpoint, this rally has been getting a little bit tired. The Canadian dollar is again now the best performing G10 currency of the year. This move lower was pretty fast move lower. Positioning got a little bit overstretched, you could say, as that is people that are long the Canadian dollar. It was like a high proportion of the market, so where are you going to get those fresh longs from? So now we've started to see a bit of a consolidation. As you can see, there's support to the north of this range that we're currently in. That's in the form of that double bottom that we had from the end of July, from mid-July to the end of July. And also now you can see that also pretty much coincides with the 21-day moving average here in orange and the 200-day moving average here in blue. That's all in the mid 124s. Now, because this move seems to this drop in dollar CAD seems to be getting a little bit tired, I wouldn't be surprised if in the coming days we did see the Canadian dollar test this area. But fundamentally speaking, I still think there's a good reason to be quite bullish on the Canadian dollar, which means you'd be quite bearish on this currency pair. So what I can see playing out is potentially a pullback to these areas of resistance, and then that being used as an opportunity to push dollar CAD through these lows that we've been struggling with, and then towards the annual low, which is around 120. We just dipped below it, I believe, back in May, June time. And I believe dollar CAD can, if conditions continue as they are, can test those levels. So what's been going on? I mean, the primary reason why we've been able to come back so strongly is two factors. The rally in the dollar has been easing up. Well, three factors. Number one, the rally in the dollar has been easing up. Number two, risk appetite's been recovering, and we've been seeing stock markets moving higher, boosted by earnings. And number three, energy prices. Remember, Canada, massive oil exporter, big gas exporter. So as energy prices spike, as they have been, that is a good thing for the Canadian dollar because it's basically good for Canada's terms of trade. It means that more people are going to be buying Canadian dollars. So those are the primary reasons why we've seen this rally. But then you've also got to throw the central bank in that mix as well. Now, inflation expectations globally have gone up. Canada's the same, but different central banks are expected to react to that inflation in different ways. Now, the Bank of Canada is expected to be one of the more hawkish G10 central banks in terms of its response to inflation and strong global economic conditions. Okay, so the most hawkish G10 banks is the RBNZ, the Norges Bank, and probably it's going to be the Bank of England as well. As we know, they're probably also going to hike rates by the end of the year. Well, the Bank of Canada is expected to hike rates potentially, this is what money markets are implying, as soon as March next year, but definitely within Q2 next year. So that's quite hawkish, and that makes this Bank of Canada meeting quite an interesting one, I believe, because the current guidance from the Bank of Canada is that there's not going to be any rate hikes until the second half of 2022. Now, if they are to stick to that guidance, that would be a direct pushback against the market pricing. It would be dovish. So that is a potential fundamental reason why you could see a move higher to test this area of resistance. But I think ultimately, even if they did do that, markets are questioning central bank guidance at the moment. You've got markets pricing in rate hikes from the RBA and the ECB in 2022, when neither of them are talking about rate hikes for years. So markets are in a mood to kind of ignore central bank guidance. So if they do maintain that guidance, I think the trajectory of dollar CAD can continue to be to the downside. But we're going to have to wait and see, guys. It should be an interesting meeting. Then obviously we've got GDP data at the end of the week, which CAD could be a bit choppy on as usual. But I think, yeah, like I've been saying, I think there is risk for a bit more of a pullback before sort of laying the groundwork for a prolonged move to the downside. But for this prolonged move to the downside, we're going to need to continue probably to see energy prices gaining, which is what most commodity strategists are expecting. And we're going to need to see markets continue to expect the Bank of Canada to be one of the more hawkish central banks. And risk appetite is probably going to have to remain elevated and the dollar not too strong. But anyway, guys, hope you enjoyed the video and I'll see you all in the next one.